Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, December the 13th, the year 2018. Let's talk trading. Let's talk about trading your way out of a slump. You ever been in a slump, trading slump? Just seems like you just keep losing. You're just in a slump. You just can't seem to win. Or when you win, it's maybe only a pip. You're basically scratching out. And then usually what happens is as soon as you scratch out, you watch price move in your direction by, bucket loads of pips. And you see, part of the problem with the slump is the slump exists in your mind. Sure, you might have those losses, but as soon as you label it a slump, then you basically are giving away your power. Hey, I'm in a slump. What can I do about it? And then you actually do more of the things that keep you in the slump and less of the things that will get you out of the slump. Because what is being in a slump really mean? You call a slump, or you say you're in a slump after a series of losses or lesser performances. And you don't get a hit in baseball, you're in a slump. You haven't scored a goal in X number of games, you're in a slump. You can't hit a basket, you've missed your last 20 shots, you're in a slump. But we all know that those are not slumps. Those are just all part of a normal distribution of wins and losses. It's just the same as the hot streak. I believe it was Nate Silver that showed that these things are not slumps and hot streaks. It's just that that's something that we label them, and then all of a sudden we act accordingly. In other words, we then start. If you're on a hot streak, it's like you can't do anything wrong, then you probably are doing the things that you were supposed to do. Meaning, the process, the steps, your plan. You're doing those things that you're supposed to do, and they're producing that hot streak. Whereas in a slump, what happens is you stop doing the things you're really supposed to do. And then some people say you have to work harder, you got to work your way out of the slump. Well, that's true in part, but you have to make sure you go back to the fundamentals. You go back to the things that were successful, and you make sure, you make absolutely sure you're doing those things, such as, and you knew this was coming, your money and risk management. And the thing is, with slumps, that's hindsight. Meaning, you base everything on the past. But right here, right now, on the very next trade, forget what happened in the past. I don't care if you lost the last trade, you lost the last 10 trades. Forget that. Focus on doing what you know worked before, what you've done before, and maybe you've had 2, 3, 4, 10 trades in a row that were winners. Maybe your normal is you win a trade, lose a trade, win a couple trades, lose a trade, win a couple more. Maybe you don't make streaks. Maybe you're more of a grind it out, and your wins are just a little bit more than your losses, so you're getting rich slowly, or you're making a profit slowly. And the main thing is, out of all of this, once again, it's in your head. So, as you think, so be it. Meaning, if you think about about losing, chances are you're going to be doing things that lose. If you think about winning, chances are you're going to be doing things that will create wins. Now, once again, remember the market doesn't really care what you do up until you press that button. And that's why the money and risk management is so important, because this is a calculated risk. So we have to calculate how much we're willing to risk, and then let's see what happens when we place the trade. That's how trading works. So here we have the euro yen at 128.81, slightly below the previous midpoint. Seems like the yen is just parking itself here so far this month. On the weekly, you can see we had entered the upper wick zone, we exited, and now we're in within the candle body. And look at that gap. All the gaps have filled. It's Thursday. Now, I think yesterday there were still 2 gaps that hadn't filled, so you had your opportunity once again to take part of this very profitable setup. The gap fill, the weekly gap fill. I mean, I'm sure if you want, you can go back. In fact, I have an indicator that can show, how many times each pair didn't fill the gap or did, however you want to look at it. Point is, it's very profitable. Okay? Very profitable. Of course, once again, disclaimer, this is all for educational purposes. Your results may differ. Okay, on the daily, it looks like a doji right now. You can see here, boom, right through the top. So once again, taking a simple candle color at the line would have been green here at 128.85. Ran all the way up here. So we had that was a 40 pipper. And that was almost 2/3 of the daily range just on that one trade. And you can see here, kind of an anemic day so far, only 3 pairs over 100. Pips in range, which range is high minus low. The daily high minus the daily low gives us the range. And taking a look here at the buy zone, you can see that the pivot was below the short zone, so that told us the bias. You could basically trade that way almost from the open, or you could have waited to the short zone. Would have only been worth a little handful of pips, but here it paid out once, came through, clear signal to buy, profitable, and you can see right now it's crossing back over the daily open. Once again, there was a buy here this hour. You could take the trade, went through the VWAP, and as you can see, it came back down. So you probably should have taken your profit somewhere around the VWAP or right around the 129 round number. Red rats just feasted. Here, green rats had a nice feast back into the red zone. And here again, we're back into the green zone. So the range is 63. The rat trade was on. Once again, we've already taken out that daily pivot. And you can see here, it was trying to get back to that 129.70 to take out one more missed pivot, but not quite. But you can see here, we are putting in, for the most part, higher lows and higher highs. So it looks like it wants to take out that missed pivot. Price action. I mean, once again, It was really very simple trades. Here you had a 3-ball, green candle closed, next candle, red at the line, good for a dime. Right there, 10 pips. 2-ball at the bottom. Notice where it was back here in this congested area. Let me, so you can see here, between here, it was ranging. It came back into that ranged area, and boom, straight up. Green at the line, good for 10, 20, almost 30 pips on that trade this hour. And as you can see, there was a lot of buying going on, tick wise. Candle color at the line, green, long, red, short. And here, actually right there at the top of yesterday's candle. Wick zone, not much of one on the bottom, but you can see here once again at the top, boom and boom. Not much of a boom to the south side, but there was another boom to the upside. Okay, Holo, get ready. Larry live trade 128.76, long trigger for a Holo. Highest open, lowest open. Inventory retraction bars. As you can see here, there was a long trigger at 29.08. That was profitable for a handful of pips, but the short trigger at 129.00 definitely produced 3 winners. Enough to pay for chicken dinners, right? Okay, you can see here on one of my favorite trading screens, all the price action here. Just candle color at the lines. Now, sometimes when these lines are close, you can almost just trade line to line. Just say, okay, let's just see. I can hold, see if it hits that line or not. Price action here on the tick level. The ask dropped below the peak of the bid, and then the bid jumped back through the valley of the ask. And you can see here, we've got some upward motion. Probably, about 8 pips worth so far there. Einstein line, once again, just something real simple. Price is going to move from the point that you start trading. Once you open that chart, price is going to move. That's if the market's open, of course. And something that I'm working on here, once again, this is the first day of the month's high and low. This is the Monday, this Monday, high and low. And once again, just wanting to look at how price action is moving around these zones. So you can see here, we're stuck. That first day of the month, we're kind of stuck in that zone. And so we'll see what happens when it breaks out. Okay, frequency distribution range here. You can see here, bulk of the range on the H1 for the Euro Yen, it's going to be between 10 and 20 pips. So anything over 20 pips is probably a large candle, which means price will probably return. And just looking here at the trade wicks. Trading the wicks. Just find me a wick zone and see if we can trade out of that wick zone. Well, that's it, fellow traders. I hope you haven't found yourself in a slump, because once again, slumps exist in your mind. So get your mind right, because it's not what you trade, it's how you trade it. Now get out there and drain the banks.